Just having a look at a quick video about the S&P 500, where it's going and where it's at the moment. And at the moment we've got this this little up leg here on the daily, was this one here on the 4 hour. This breakout here is the same spot on the 4 hour here now, getting very wide of the 100 MA now, so getting very wide of the daily Keygens as well. So we've got the daily MACD still crossed up and it's above the line. So I'll be looking for evidence. I've got some SPY calls on at the moment, so I'll be looking for evidence to close those. I'll have a very tight stop on those. I wouldn't be surprised if I get stopped out of those. I've got a reasonable profit on those, so I'm going to look at locking in profits on those. Still got a bit of time to expiry, but I'm going to take if I get a 4 hour close below this trender, I'm probably going to take profit on those. And it's been quite good trading. And let's have a look at this breadth now. Breadth has actually come back it's into the bullish zone now, so it can stay in the bullish zone for a very short time, as it did back here in 2018. So if that starts to turn over again, we've got the resistance up here. If it failed to clear that resistance and started to turn over, then it's going to be very exciting to see what happens on the downside. But at the moment we've got a bullish bias, so we don't want to try and guess what's going to happen. We don't want to make assumptions. We want to let the information that we're seeing tell us what to do. If I tried to trade based on what I thought was going to happen, if I tried to say, the fundamentals are, the market shouldn't be this high based on fundamentals, I would be really struggling to make a profit at the very least, and most likely I'd be losing money if I tried to trade based on where I thought the market should be. That's really the biggest trap that I see a lot of people falling into. They start their sentence with "I think," and you've got to try and get out of that habit. It's not about "I think." It's about letting your analysis do the work for you, not about what you think. Let's have a look at the VIX now. The VIX has got a base here on the daily and on the 4 hour, so I'm looking for a bit of a bounce off this support here. They've got the daily Keygens flat here, so we're still below the MACDs on the daily, still below the centre line, so we're just waiting for more evidence yet. But what about junk bonds? Junk bonds are in this bit of a lead. The junk bonds have been leading stocks up, so at the moment they're holding up fairly well. So you have to see a sell-off in junk bonds to get any bearish evidence to the downside at the moment. So looking pretty good now. Have a look at 20 plus. This is a 20 plus year bond ETF. So bonds have sold off a bit there, and on the 4 hour and on the daily. So it's not bonds don't always correlate to stocks. Like sometimes bonds and stocks often go up together, so you can't use that as any sort of guide as to whether. If bonds are selling off, it usually means that people are taking more of an appetite for risk in stocks. But then if bonds start to get bid up again, then you can probably expect to see a bit more downside potential in stocks. But at the moment, it's not. We're not seeing any evidence of bearish activity. So you just got to take it as it comes. And this was just a quick one, and see what happens. See if we get any progression from here as to the buyback blackout period has ended now. So that was the main thing that the institutional traders were focusing on what happens during that period, but we've come out the other side of that now apparently, and it seems to be a melt up as they were expecting. So they did say if we come out the other side of it, you can expect to see a melt up, and that's what we seem to be getting. So they tend to hedge there. They tend to have an each way bet bit, which is they're not really saying to act on their advice, but I mean they're just giving their analysis, which is fair enough. But you could sort of rely on what your own system's telling you as well. You can't listen to what, even though they're institutional traders, they quite often, they admit that they get it wrong quite often. So does everyone. So you've got to do your own research and take what they're saying with a grain of salt, really, a bit of interest, but don't really try to take what they're saying as any sort of trading advice. That's what I do anyway. I'm interested in what they're talking about. I've picked up heaps of interesting stuff from listening to what they say, but I don't take it as trading advice. So anyway, that's enough for now. Quick one, and see what happens. But bye for now.